More bank earnings are slated for this week, including Morgan Stanley and U.S. Bank Corp. Reporting before the bell tomorrow. Joining us right now to talk about the earnings season and stocks investing today is Chief Investment Officer for OppenheimerFunds, Krishna Memani. Krishna, good to see you.
Yeah, good seeing you as well.
Thanks so much for joining us. Let's kick it off with the financial services sector. How have the banks done so far in your view?
They have done very well. I think earnings are coming out really good, and I think the outlook from the management teams is quite good. Financials are in a really good place. Rates are going up, their margins are expanding as a result, taxes are favorable, economic environment remains relatively solid, so it's all good.
So you would buy the banks right here?
Oh, absolutely. I think banks and technology are two of our favorite sectors.
So you would buy stocks in general? You want to put money to work?
We like equities. I think in the current environment, equities will do well. You just have to have a reasonably long horizon and not get taken down by the Februarys and Marches of this year.
So that's sticking to market leadership, because technology and financials led us last year. They led us going into this year, especially in January. We were up 5%. But one of the biggest issues I'm having right now with the market is the multiple, right? As the Fed starts to raise rates, right, earnings are worth less. We saw the inverse when they were actually doing their quantitative easing program. So if I look at the S&P 500 earning $155 this year, I put a 17 multiple, we're trading above that. If I put a 19 multiple, we're under that. Where should we think about where the market should be at the end of the year? Well, is this a multiple story?
By the way, before you answer that, the Goldman Sachs number is a double beat. It's coming in at $6.95 a share versus an estimate of $5.58, and the revenue is now $10.04 billion on Goldman Sachs revenue for the quarter versus an estimate of $8.74 billion. So, Krishna, you were right. These numbers are better than expected, and that stock is on the move right now.
Yes, and I think to address the multiple issue, to some extent, a lot of it is built in. That is, the multiples incorporate the view that the Fed is in a tightening mode. And if that wasn't the case, I think if we were printing these types of earnings in 2016 or 2015, the levels in the stock markets would have gone up meaningfully higher. So I think we are incorporating all of that. I think the bottom line is the overall economy is doing well, earnings are doing well, and as a result, equities over the 12-month horizon are probably going to be higher.
Where do you stand on energy? This is a theme that Jason Trenner was talking about with financials and energy. Strong fundamentals, but also the backdrop of a rollback in regulations on these two industries by the Trump administration. We talked to Tom Closa yesterday, who said that 5 to 8% of kind of the big energy companies, that's how much they make up the overall market here. It used to be 15%. Do you like energy here, particularly with what oil's doing?
I think for us to like energy, we have to expect emerging markets growth to accelerate in a meaningful way. And I think that's not on the card. So emerging market growth is solid, but it's not accelerating.
Okay, but China's economy grew by 6.8% in the first quarter. I mean, this is despite trade tensions with Washington. So you're talking about emerging markets, the biggest of them all. China just saw exactly what they told us would happen.
But I think you have to look a little deeper and see which part of the Chinese economy grew. It's consumption as opposed to industrial production. And that sort of tells you that the energy intensity of emerging markets is actually going down rather than going up. And that's something that you have to keep in the back of your mind.
You mentioned China, just to introduce another story that's out there. And we try to find these stories every morning that a lot of other people in the media overlook. But this one is it's in the news this morning. China announced plans to allow full foreign ownership of automakers in 5 years. So, again, more conciliatory remarks and announcements out of China in terms of trade with the United States.
That's a huge deal. We know that, right now you cannot have any ownership of anything in China. You're lucky if you get a 49% stake in a joint venture.
Sure. Yeah. So I think this was one of the topics of the tariff thing that was hitting us in February and March. I think at the end of the day, it's in everyone's interest to negotiate these things down. And therefore, fears of trade wars, I think, is highly exaggerated. At the same time, I think the Trump administration, to some extent, is pushing the right issues from a Chinese policy making.
So he was right to shake the tree.
Oh, absolutely.
Yeah, I mean, it seems like these fears have subsided. The market's not reacting to them as strongly. Yet we're seeing now that the administration wants to go after China on cloud computing and ownership there. You talk about the joint venture thing. are these issues going to keep coming up, or have we made peace with this process?
Well, I think these issues will keep coming up. It's just that we won't be as fascinated by these issues as we were earlier, as we kind of recognize as to how all of this is going to be resolved. So from our standpoint, as long as the economy is good, earnings are good, we are in a good shape. Everything else is a bit of a sideshow. We'll look through it in 12 months' time.
Well, here we are. I mean, the banks are the domestic economy, right? They've benefited actually from the new tax plan. We've seen Goldman actually this morning.
The rollback in regulations.
And the rollback in regulations. Goldman Sachs just boosted their quarterly dividends. Their equity sales and trading actually completely smashed the estimates. They actually beat on investment banking revenue. I'm looking at their FIC, which is fixed income currencies and commodities. They beat on that. So I mean, it's across the board. They're doing well. So every bank that we've seen come out has performed.
Because you're going into a period where it's like beautiful for the banks. You got higher interest rates, you got a better economy, and the demand story is stronger, and you got a rollback in regs.
Yeah, and higher volatility. So people are trading and doing things that they weren't doing earlier.
So you would buy Goldman Sachs here?
I would buy financials in general.
Okay, financials.
Yes.
Now, you just said you're buying financials and technology.
Yes.
So one of the top stories in the Journal today, Facebook taking the bite out of technology bets. Are you taking the F out of your FANG portfolio?
But I think Facebook is an idiosyncratic issue. It has substantial issues for sure. But I think overall technology growth rates or their revenue growth rates are fantastic. In a slow economy, slow global economy sector that can deliver the results like technology can, I think people would pay fancy prices for it.
And that's what every other technology company is saying. This is idiosyncratic. It's just Facebook. It's not us. Interesting to hear you affirm that. They love you saying
Reed
that.
Hastings at Netflix, the quote was, I think we're substantially inoculated from the other issues that are happening in the industry. But other companies are not inoculated. You look at a Google, the spotlight, Amazon, the spotlight will surely be on them just because of the huge size of Amazon and how they are moving more and more into every industry.
And all the data they have about us.
Right.
Yeah.
Well, and how they're using it or abusing it for literally a decade in the case of Facebook.
Right.
Clearly, the technology companies, the concentration is something that we have to worry about. But at the end of the day, they're executing so well that there's not a whole lot to kind of get too worried.
So you still like tech?
Well, I think tech and financials are two of our favorite sectors.
All right, we'll leave it there. Krishna, great to see you.
Good. Thank you.
Thank you so much. Krishna Memani from Oppenheimer.